We are live, boys and girls. Shaun, how are you today? Glad you could join us.
Pretty good. I'm in a detox mode. Us Maxis need to detox every so often, otherwise we fuck right up.
I thought maybe we ran you off last week, and you just just didn't want to deal with it anymore.
No, I was just kind of Twitter. I'm not like Twitter, as you guys know, is very kind of central to the space, but I do find it a bit toxic. So I just decided I'd take a month. I'll be back in January, just to kind of chill out and take it a bit easy. And I'm still doing it, but I'm mostly out in the mountains planting trees and doing a bit of trading.
Like literally out in the mountains?
Well, I'm building this place out in the mountains. When I say I'm planting trees, that wouldn't be fair. There are people out there planting my trees. So, I have to be completely honest about it.
What general location in the mountains? I mean, like where?
In Dublin, we call them mountains. They're kind of small, large hills, really. So about an hour south of Dublin, I bought an old farmhouse and some land that we're turning into kind of a Bitcoin citadel. And so we got planning there, but there's some land, so we decided to rewild it and plant trees and, I don't know, put water into holes.
That's awesome, man.
Things, that kind of stuff, yeah. So to escape this crazy life every so often, the plan is when they finish building it in a couple of years, come the weekend, I'll just jump in my Jeep and head that way and like somewhere with no internet or any of that.
I friggin' love that. That's beautiful. That's when my wife and I start traveling after the kids graduate, we figure we'll have a little cabin somewhere in the mountains where we don't have to deal with anything, but we'll have a home base. So I think that's the plan. I think Joe has made it.
Yeah. Can you guys hear me?
Yeah.
Yes?
I'm seeing a little lag, but it may be on my end.
Yeah, I think it is. No, I'm just putting out some, kid fire right now. So I got to send an email in the middle of this message. So, but yeah,
right.
everything's good. I was trying. Oh yeah, just back issue. Lots of sports kind of thing. So, I'll deal with that while you guys just start talking. I'm just waiting on an email. So apologies. Shaun, welcome.
Awesome.
Hey Joe, how you doing, man?
Better. Thanks.
Good.
Well, to everybody joining us live, and then everyone else that is going to be listening on the podcast, where most people do listen, thank you for joining us. Today we have XBT3D, or Shaun, as we all know and love him, and he's going to be joining the show every week for us. So we are spared the detox. And are honored by that status. But he's going to be joining us every week to talk about just the world of trading and Bitcoin and everything that's going on. But today, last week, I asked him if it would be possible for him to walk through how he has been so successful in the world of trading over all these years, and maybe give us some of the lessons he had to learn the hard way. So I know that's a big challenge for him. Those of you listening on the podcast, I would highly recommend jumping over to missiondefi.com once this episode is up, because Shaun's going to be sharing a rather wide screen with us as he talks through it. And you're probably going to want some of the visuals from that. So those of you listening, you're going to probably learn something if you're sitting in the car and listening. But when you get back, I'd head over to the missiondefi.com site to watch the video. Mr. Muccioli says, "Why aren't you deer hunting, Shaun?"
We'll have to wait for the barbecue to be built before we do that. But there's actually a deer problem out there, which I didn't believe. So they're actually putting a deer fence around these expensive trees to stop the deer eating them. But once I start to use it, I shall definitely be looking at how to deploy deer on the barbecue.
Well, I love that you're planting trees for the Bitcoin climate offset.
Yeah, I'm involved in another interesting mining project, but details of that will come out, which is based on animal waste, but it's early days. So
wow.
We've applied for planning permission, but basically powered by animal waste. So
that's phenomenal.
Yeah, we'll see how that goes. But I think it's, the idea of it is to demonstrate that, mining doesn't boil the oceans, and that there's some really cute stuff going on out there. But again, we'll see what happens. That's probably a year away before we even get any planning for that. My own place, it's just got, it should do. Once they build it, it'll be rather a large mine in a basement. So I like ideas of houses that actually make me money rather than just cost me money.
That's a beautiful thing. And, look, I mean, I think we always talk about the fact that mining, actually, the incentives around it actually drive cheaper renewable energy innovation. And so I think that's going to be a great example of it. I can't wait to hear more of the details. All right. So let's I'm going to let you take over, and I might, occasionally interrupt you to clarify some things, whatever. But if you're ready to go, I'm going to add your screen to the stream, and we'll take it from there. That sounds good.
Yeah.
Awesome. All right, everybody. I'm going to hand it over to Shaun. If you have any questions as we're going, you don't understand something, post it in the comments, and we'll get Shaun to clarify. So thanks a lot, Shaun.
Cool. So I guess first a little bit of background. I have been in the space as a miner, or hashing as we used to call it, since the dawn of time, 2010. I was in quite early, and I was primarily a miner through 2017, 2018. Never, to be honest, if you'd asked me up to 2018, 2017, about trading, I would have went, well, that's just for a bunch of degen gamblers. Yeah. And I kind of like my Bitcoin, so I'd like to keep it and not lose it to the markets. But in the Great Depression of 2018, which doesn't feel so bad these days, I decided that I would start to look at, we shut down the mine. It just wasn't economic. And I said, look, I'll start to look at how to trade. And I guess it's a path that most people who get into this, which is like, I had zero experience. I hadn't got a fucking clue what I was doing. And over the years, I've developed some approaches that people may find useful, and some views of the market that are quite different than probably how most people trade. I would say that most people I see trading really shouldn't trade. And I don't mean that to be negative to people. I would say, look, the unfortunate reality is that, 80 to 99% of people who are button clickers are going to lose their money. So if you're going to play the game, probably you need to think it through. So what I'm going to do today is just discuss some of the ways that I trade that are probably quite different than the way most people trade. I do two things. I'm an algo trader, so I started to develop algorithms that would trade the market for me, and I'll discuss how I go about those, and what kind of results, and so on. And I'm a manual trader across different time frames. So I will take cycle length positions or half cycle length positions. So for example, I've short from kind of mid 60s. I'll hold that till I think the bottom's in. And then I'll flip along when I think the bottom is in, and I'll hold that, through a 2-year cycle. I do relatively high frequency manual scalping, I guess people would call it, which is more probably again quite different than the way other people scalp. When I started trading, I lost my ass. Yeah, I mean, I just the market handed me lessons that I initially decided to ignore. And then the more I played the game, the more I realized that that there are different ways and approaches to do this. And fundamentally, what I base my trading style around is the fact that guessing direction is probably the lowest contribution to profit over extended periods. And this is something that I think a lot of new traders or people who are relatively new to the game should consider. In other words, me deciding to flip a long or a short here, on whatever basis I decide to do that, is certainly going to have an impact on profitability, but I would suggest it's actually the least impactful thing. And the reason I would say that is that if you actually look at, so some of the things I looked at were, which I'm going to open up this silly spreadsheet. So I began, when I looked at this and had my ass handed to me in my shitcoinery days, I began to go, well, how random is price movement? Yeah. When I'm sitting there using, the best of my abilities and all these indicators and so on, exactly how random is it? And this is kind of an interesting chart. This is a distribution of 1 hour Bitcoin candles going back to 2015. So the distribution is quite simple. At the bottom, for every candle, 1 hour candle that's been printed, there is the percentage move. Yeah. So how much did that candle move? And then the blue line is how much did it move up? And the orange line, brown line, is how much did it move down? So
interesting.
You would expect these things not to match, particularly when you consider since 2015, we are substantially up. So yes, there is more up movement,
right?
But the difference is substantially lower than people think it is. So when you plot out these moves, you can see, you probably can't even see the difference between the two lines. The difference is the dotted. So there is slightly more up movement than down movement. But when you start to consider the market in these terms, you begin to see that in general, from somebody who is looking at trading, the distribution and random probability of the next candle going up or down are not really that significantly different. And this is quite surprising to people. Yeah.
Yeah.
So again, taking out me looking at indicators and drawing lines on charts and just looking at the data as it exists, I'm going, without looking down at the probability of the next hour candle being up or down, it's kind of a coin flip.
Is this something you built to really kind of tell yourself, hey, this is, not the way to do it?
I downloaded the data and ran it through Excel out of curiosity to look at this and go, well, because most trading is going, I think the price is going up, or I think the price is going down. And and I take a long position or I take a short position, and then I have a view of how far it's going to go. And that all seems very rational. And from that, most traders, and again, I'm not criticizing this, I'm saying this is what most traders, they'll have formed an opinion as to why they believe it's going up or down. It could be, some div on the 4 hour candles, or, some resistance line, or in far more advanced order flow analytics and so on. And just to be clear, I'm not saying they're not useful, but what I am pointing out is that in general, that up movement and down movement is probably a lot more random than people think.
Yeah. No, that makes total sense. And you would think that most people start to sense that once they lose enough money predicting it.
Yeah, the match of the curves is pretty shockingly, and again, anybody can do this. You can download the 1 hour candles. And then if we look at the candles, and another factor then, which really I got really curious about as I began to think about that. So this is the percentage 1 hour move in time. Okay. So basically this is from 2015 till today. And each dot represents how far a 1 hour candle has moved up or down. Okay. So again, what I was curious about when I looked at this is, when we see these big runs, what are the levels? And what you can see almost always is that within a big up run, there's always going to be an equivalent down run. So wherever you get these spikes, you get this kind of reflexive movement. And what I was really curious about, which is because, being around and pushing buttons for so long, is we're always terrified of being on the wrong side of a big move. Yeah. And I go, well,
sure.
How far can price really move in an hour or a minute or 4 hours? And the answer in an hour is we have one example of where it moved 28%. But in general, it's moving, an hourly candle is going to move, a couple of points. It's going to move actually about 0.25%. So the first thing when I looked at trading is to just look at how reliable signals are. Now, do not get me wrong. I know traders who have such an instinctive feel for the market that they can sit down and go, the next candle's up, the next candle's down, and so on. Yeah. God bless them. I don't have that ability, and so on. And the point I'd make is don't try to have it. Yeah. Some people are great football players. Let them be great football players. Okay.
Yeah.
Maybe football isn't the game you need to play to win. So I looked at this, and then I began to realize that if I take my own data as being real, or my own analysis of just a bunch of candles being real, I probably need to develop a way of trading where the price direction doesn't hurt. Okay, so this is the bit where people go, well, hang on a minute. So what I developed is the technique of trading, or some rules of trading, where I'm going, if I'm wrong, my worst case is that I break even. And if I'm right, I'm going to print some profit. Okay, which all sounds...
That's awesome.
Yeah, it all sounds like, clearly that's wouldn't that be wonderful if it's true? But actually, if you dig down to it, it's generally not that difficult to achieve. So again,
if you start with that as your goal, right, then you work towards the infrastructure, the algorithms that get you there, then that makes sense. Real quickly, Niblett said, and I think you're basically answering this right now, if the hourly candles are randomly up versus down, at what scale do patterns start to emerge, or do patterns even emerge?
Yes, patterns do emerge. And again, I am not dissing, as you guys know, I'm a huge TA guy. I take, biases up, down based on this, but so I'm not dissing TA, I'm not dissing any way, and I'm not saying that signals aren't important, as in you see chart patterns or you're looking at macro and you can develop a bias. But I'm saying forget that for a moment and just look at the raw data. And the raw data says that the next up-down candle is kind of a coin flip, yeah? And so I will get to the fact that you do use signals and so on, but if you look at this in terms of EV, expected value, okay, so a lot of traders will trade risk reward. So they'll go, look, I'm going to risk 1% to get 10, okay? So I'm going to have a stop 1% below this, and I'm going to let it run for 10%. And that means that, I need to win, 1 in 8 or 1 in 10 to break even, okay? And there is this kind of addictiveness to this concept, okay? That because what I would always say to people is, okay, let's do this risk reward math. How about, okay, I'll give you really good risk reward. How about I give you 0.01 to 1,000? You're going to go, that's the best fucking risk reward on the planet. Okay, so I'm going to put a stop at 0.01. I'm going to put my take profit at 1,000. And you begin to see, with the ludicrousness of that statement, how ludicrous the actual model is. Okay,
sure.
So I'm not, whereas I'd say to people is look at it in terms of expected value. And what I mean by that is that you just don't take this risk reward model. You have to take into account the probability of these moves happening. For example, and again, to go to ludicrousness, okay, if it's a 100% probability that the price is going up 10%, okay, I don't need a stop. Yeah. Why would I have a stop? It's
right.
This is straight win. Obviously, nothing in life is like that. So again, I would say to people is that a lot of this risk reward stuff I think is bullshit. I think it's total bullshit. And it's easily demonstrable to be bullshit simply by extending it to going, okay, you've got a 1% stop for 10%, a 0.1% stop for 10%. You've just done 10x in your RR. You should be a fucking multi-billionaire now. The markets don't work.
Right. Right.
So I threw out risk reward. I threw out using stops. I'm very much in the wifey camp of stops are for buses, not for trading. And I went, however, I need to manage a risk. Okay. And it's really important I manage risk. So I began to think, look, in the event of randomness, how can I trade the market where my risk of loss tends to zero? Okay. And ultimately, this is where you come down to kind of really important things. So I trade 99.9999% of my trade volume is Bitcoin. Okay. I have a model of how far Bitcoin can move and historically does move and so on. Now I have to choose a trading venue and a contract because I can trade this asset. I can use options. I can use, option straddles. I can use futures. I can use spot. I can use a whole bunch of different ways. But what I need to do, again, is to find something with an edge. I can margin it with Bitcoin. I can margin it with dollars. I can margin it with euros. I can margin it with yen. Okay. So all of a sudden, just the fact that I decided to trade this asset opens up a huge range of venues and ways to trade. Okay.
Right.
And so what I would say to people is again, that just because you're on Binance or Bitfinex or whatever your trading platform is, you should ask yourself why, and is there a contract out there that gives me more edge? And if there is, why am I using it? So you begin to see
makes sense.
You begin to seek these edges, and fundamentally, the way I manage risk is very simple. So I trade on BitMEX, which is an inverse swap contract. And I'm going to do a shit trade just to demonstrate it. Now, I am dyslexic as fuck, as anybody who knows me knows. So even when I'm manually trading, I don't type numbers in because I could just as easily type 20 million as 2 million. And I fucking have. I could just as easily hit the long button or short button as I have. So I just developed this crappy little thing here. So here's what I'm going to do. Joe, pick a direction.
Joe's not on. So you mean a direction or down?
Up or down? Long or short?
Down.
Down. Okay. So here's how I manage this. So I trade position size based on leverage. Okay. So what do I mean by that? I mean that when I'm trading and I'm choosing a position size, I'm choosing it relative to the size of my stack always. So in this case, I'm going 0.06 leverage short, which just because of what's in this account is 211,800 euros. Okay. There's a really important point that's going to come here because I'm hoping that we pump up and we fill. The second thing I'm doing is that I'm trading on a venue, okay, that when this fills is going to pay me a fee. Okay, so I'm going to get 20 bucks profit just for filling this. Sounds like a small edge, but trust me, these edges begin to stack up completely. Yes.
And why does BitMEX pay you that fee?
Well, again, market structure is basically makers and takers. So takers are people who are marketing order. They're called takers because they're pulling liquidity from the market. They're taking liquidity. And makers, and the term market makers, are people who are adding liquidity. So I've added 211 grand here of liquidity onto the book. Okay, I need a taker to do that. Most exchanges will pay people who do significant volume a maker rebate anyway. The difference with MEX, although I believe they're going to change it fairly soon, but I don't know that for a fact, is that they pay everybody a maker fee. So if you're trading $100, and it's been like that since the year dot. So again, small edge. Now we're in completely illiquid, so we'll just let that run. But in essence, what I'm going to do when I start doing this kind of micro scalping is quite simple. I am going to go in at a position size of 0.05 of my stack, okay, which seems rather a small percentage. I am then going to use the rest of my stack up to a maximum leverage of 1, okay, to manage my average entry. So when I'm wrong here, hopefully this fills and we pump. What I'll start doing is entering and exiting, okay, the contracts in order to move my entry up with price or down with price if I'm long. So I'm always constantly massaging by adding and removing to the position. I'm always focused on average entry. And if we can get a fill here and hopefully the price pumps, even though I'm short, I can demonstrate how simple this is. And this is because I have a simple mathematical model in my head that goes at 0.06. When I come to DCA this, and I hope we get a chance to DCA it, okay, I'm going to 4x DCA it. That's going to bring me to 0.25 leverage. And I'm going to smack my average entry right to price. And I'm going to take out the funds I added. I've now moved this $200,000 short up there. And so it's this hyper-aggressive DCA model by using relatively small positions. That is the key to it. And the other thing is that at 1x, my worst case, let's say I fuck this up royally, okay, price suddenly pumps up to 50 Gs. At 1x, which is where I will ultimately end up on a trade position like this, if the price is really ramming against me, that just means that my downside is dollar value because it's an inverse swap contract. So
okay.
The worst I can ever end up here is with about $3 million in cash.
All right. So let me.
My stack is 200 Bitcoin or whatever. So again, it's this way of finding a contract and finding a way of trading where if I'm wrong, I'm not going to lose anything.
So you are auto-calculating in your head these strategies based on what you've entered with. I'm assuming you do typical sizes over and over again.
I do. What I actually do, the reason I developed this crappy little thing here in Python is because I'm so dyslexic that I just get it to automatically calculate it. But I could just be typing this in by hand.
Okay. Yeah, it's hard for us to see the screen right now, so I didn't know if that was something that was showing you where you needed to enter.
Let me open up something white here just to show you this. So I've got this little tool, horrible little tool that just gives me scalp long, scalp short. That will put in an order that's 0.05 leverage on my stack. So my stack's $1,000, it'll be 0.05. If my stack's $1 million, it'll be 0.05.
Nice.
I then have different TP levels and that's all. I also
gotcha.
It's also order chasing, price chasing, because I want that free 0.01% I'm going to get for fill. So as price moves, this is just going to follow it. So this is going to go up and get me a fill. So again, there's no, as you can just see there, price jam down, and I'm hoping we jam up just to demonstrate what I will then do. But my point about it is what I'm doing here is I'm managing risk where my worst case position by contract selection, okay, and position sizing is that I end up with a dollar value. That's literally as bad as and I would trust me with this position sizing and this kind of DCAing, I would really have to fuck up badly to revert to dollar value. So again, an example of how you can trade where your downside is just sitting in dollars.
Yeah, that's fantastic. For folks that aren't familiar, could you walk us through inverse swap and why you chose it, what it is and why you chose it?
Yes. It's a perpetual contract. So let me get rid of this. It's a perpetual contract, which means that it's a futures contract. In normal futures contracts have an expire date. So I'm operating the Q4 futures contract, which means on the 31st of December or 30th of December, that contract expires and is settled. Okay. A perpetual futures contract has no expire. It's a bit like a CFD. It's literally a contract that will run through to forever. So it's a futures contract. It's not that an inverse contract. And then the question is, how do you margin that? Well, since this is Bitcoin dollar that I'm trading, so I'm trading the Bitcoin dollar price, I could margin that with dollars, in which case it will be a linear contract, okay? And in which case I can actually take a loss, or I can margin it with Bitcoin. And the reason I can't take a loss if I margin it with Bitcoin is because if I'm short, as the price is going up, my collateral is rising at the same rate that the price is going up. Therefore, I can never face a liquidation event. Therefore, I can never lose dollar value. So again, this is about, you know, using the edges that are out there in the market to your advantage. And I go back to, again, that, you know, being basically not that good at picking price direction, I began to develop methods where it doesn't matter. So in other words, if I flip a coin and I'm wrong, and I have to be really wrong because, again, of my position sizing, I have to be wrong multiple times, then I'm going to be wrong, which is I just reverted to dollar value, and so on. But again, lots of position sizing and control metrics where, again, I have had situations where I've been stuck in dollar value for a week or two. I just ignore it and I let it roll. Yeah. So that's what I manage it.
And that's an important point too, is being able to ignore it and let it roll instead of feeling like you have to act on it.
Yeah. That's another thing is that if you're going to scalp, do these kind of micro scalping things, which I do. And again, I'm talking about micro scalping here. I will have 4 or 5 different accounts. Okay. And so if one gets stuck, I might have one long and I'm waiting for it to do something, and one short, I'm waiting to do something. But every time I want to do something, I can sit down and go to an account and start printing some returns. But again, my point about this is really, this is a combination of taking an edge from a contract that's out there, okay, applying that as a risk management tool, okay, and then using positioning, sizing, and some understanding of what price movements are really possible to be able to generate a no-lose position. Because if you take my initial data and go, look, the next hour up or down is kind of random, there are ways to make it non-random. But if I just go, look, in general, I'm going to say up or down and the next hour is random, then you can see if you can't lose money, then basically 50% of the time you're breaking even and 50% of the time you're printing money. And boom, you know, that's not a bad outcome.
That's a fantastic outcome. That's brilliant.
Yeah.
That's fantastic, man. Wow.
And then, sorry, Brad, far away. Yeah.
I was just going to say, do you think that, well, first of all, I wanted to ask you, how many trades like this are you doing in a day?
Manually, if I'm in the mood. Okay. Because what some traders will notice is that I'm using, relative to my stack, I'm using small positions. Okay. And I'm going, I don't care how big your stack is. If you're, and I'm trading leverage, but again, for my leverage to hit 1 would be highly unusual. Yes. So in real terms, I'm not necessarily printing big percentage returns. But here's something else I'd say about this is that, again, in terms of people get big move syndrome, fascinates me. Yeah. So when we've been ranging, which we have, you know, for the past day and a half, it seems everybody wants to position for the big dump or the big pump. Okay. And again, nothing wrong with that per se. But what I would say to you is that if you were trading higher frequency and just taking the pennies every few minutes. You make more money in that penny taking than you will from the 50-50 chance of the big move. So another thing that I'm very focused on is very high trade frequency, both in my algos, but also when I'm trading myself.
And
so,
that seems to be the.
Sorry, Brad. I will, for example, if we fill this and it starts going, I'll just start fucking taking profit constantly. Yeah.
Nice. Yeah. Well, it makes total sense. And the interesting thing is how focused traders are on the big moves more than anything else, when there are lots of opportunities for these little moves that can make you money and stack up, significantly, right? And especially if you grow your positions.
Yeah, if the market wants to give you free money, it's kind of rude not to take it. That's the way I look at it.
I love that. I friggin' love that.
Whereas what most people do, and again, I'm not saying everyone we're doing, and remember, most of the time we're actually just chopping and going sideways. So everybody gets into a position, and then we're all in the groups arguing, oh, I think it's long, I think it's short, blah blah blah, and I'm going, I don't give a shit. I'm fucking just taking money constantly. So when I'm in a scalping mood, I could do hundreds of scalps in a day easily. Yeah.
Wow. All right.
So and again, I also have to say that I do also do very long-term trades. So I will, when I think the market's at a turning point or it's significant, I will take a position. I'm quite happy to hold that for a couple of years. So that's something else I would say to people is that, and again, I'm not saying I'm the best trader in the world, but I can tell you, every morning I wake up, I have more Bitcoin than I did the morning before.
Nice. That's fantastic. Morning. That's
so
beautiful.
try to operate trades in different time frames concurrently.
Amazing. So from your perspective, the reason you look at the overall market is because you're accumulating Bitcoin, and because you do some longer term holds, whatever. Yep. But the real moneymaker for you is these manual scalps, and then what you do algorithmically, high frequency as well.
Yeah. So I developed is such a big word here. Okay. For because again, what is an algo? Okay. What is it? Let me be fair. Let me just close that down. What is an algo? In its simplest terms, an algo is simply something that generates a signal. Yeah. Long hair, short right. There. Okay.
Right.
And maybe one is to take profit. So I developed what I call extremely dumbass algos. Okay. So up to now, these have all been written in Python, handcrafted, and so on. But the kind of signals I'm interested in are very much the kind of signals that are not to do. I don't use TradingView signals. I'm not interested in waiting for a signal from TradingView. I'm not saying they're bad, but I will, for example, just look at real-time order flow. And for example, I will say I will counter trade a liquidation. So if I see a liquidation, a long getting liquidated, I'm just fucking throwing in a short. Okay.
Got it.
And I do position building, by which I mean that I'm not ever looking to go all in and out. Goes long, I long it, and then it says short, I close the position. I'm constantly building positions, having multiple orders and so on. Again, average entry management, and I have different TPs. And again, I think this is something that's really interesting. So this dumbass, and the other thing I would say is that the idea that there's one algo that will fit all market conditions is kind of dumb. Yeah. I mean, I don't know, 25, 30 different, I keep coming up with dumb ideas and I'm doing them. But for example, this one is a bear market algo. Yeah. This one I just run during a bear market. And what this does, this looks at something they call toxic order flow. What the fuck does that mean? It says, look, if there's a bunch of people market longing, okay, and if that causes the price to move, that's dumb money. I'm counter trading it. That's the simplicity of the thing. Simple. Because smart money doesn't want to move the price; it wants to fill a position. So this is the basic
Makes
principle.
sense.
So all that this does, and that signal could be one of anything. Okay, I then wrap around that position sizing and everything we talked about. And I actually, to be honest, I only started this off this particular one. This is an account that I'm running. I call the algo Macro Bear. Don't ask me why. I've got interesting algo names. But I will run this for the rest of the bear market, and it does well. But what do these kind of simplistic signals, again, wrapped around some edge, contractual edge, and position size management produce? So I get this thing just records. So here's this dumbass algo, which I started in, I don't know, July, I guess, of this year. So blue is price. The gaps, by the way, is literally where the algo stopped working and I didn't notice. I didn't restart it. And
okay.
You'd be surprised how common that is. Okay. Yeah. So what you can see, even a dumbass algo like this is printed 75% up to the last few days. Yeah. With
holy shit.
So, that's not because this is the smart, trust me, this is one of the dumbest algos I've ever written. Okay. It literally just goes, if price goes up using this toxic order flow, just short the fucking thing. Yeah. And so on. So again, you can see there's some variability on it and there's some average entry managing. But again, these kind of algos can print, and I would operate lots of different versions of these. But again, fundamentally, everything I do is always, if this fucks up, I just flip the dollars. I'm cool with that. Yeah. And the position sizing and everything about it simply goes that this is just going to print money anyway. So again, my whole market approach is, if you don't lose in what is basically a random environment, you're going to win. It's not complicated.
Yeah.
When I talk to people about this, and I know in the MI groups, I always go, look, I just have some dumbass algos. You'd be surprised at how completely fucking dumbass they are. Okay, in terms of the signals, the only bit that is of value is this risk management layer and this contractual edge layer. And just taking something as stupid as this algo, which I literally just wrote, I think, in an afternoon one day, just maybe this will work, set it running. As you can see, like, it's not a bad return, 75, 80% or whatever.
Right. No, that wouldn't be a bad return.
Yeah.
Well, I think what's interesting is you keep referring to everything as dumbass algos, but I think the dumbass in this case means simple, right? Yeah. I mean, the theme I get from you is, while some of this may seem complex to people because they're not experts in how perpetuals work or inverse swap or all of that, in fact, your approach to everything is, how can I keep this as simple as possible and follow kind of a set rule of, if this, then that, instead of if these 5 things, then these 12 things, blah, blah, blah. The complexity that everyone tries to put into this because they think it needs to be complex.
I would always point people back to this chart and I go, look, this is telling a story. Absolutely, it's not the complete story. TA does work. I do position on TA and so on. But in general, if you accept that a lot of price movement is random, okay, then you should probably trade in a style where not losing is actually your win. Do you see what I mean? Your win is to go, well, if it's a coin flip, how can I play this game where I don't lose, because I'm going to win the positive coin flips and I'm going to break even on the negative coin flips? That's kind of an okay result, yeah.
Hell yeah, that is a golden result, and that's kind of also where the fee that you get from BitMEX comes in, right? Is that you're offsetting and or adding profit to the ones that just break even.
It does help. It's actually because I do know they're considering dropping it for, again, idiots like me who do a lot of volume will still get paid it. So, But in general, it's quite easy to adjust for. I need to think of it like this. I used to get 0.02%, in and out of a trade, and maybe I'm paying. So I just need to slightly modify a TP to compensate for it. It's not a big deal. It's something that you do need to consider. But again, what the reason I mention it was simply that, while the market's offering you free money, I don't understand why people don't take it. I just go like what's the issue here? Yeah. If the market wants to give you free money, take it. And again, my whole method and style of trading here is based around higher frequency. The thing that people I think miss is that if I can do 0.1% profit 20 times a day, I'm gonna so outperform the guy who's sitting there waiting for the 2% move, because he can be wrong.
Yeah.
Okay. And I'm just going to constantly over pennies. He or she can be wrong. Yeah.
Yeah. Well, and if he's wrong,
I'm so confused. I'm from the 80s. Forgive me.
I mean, look, when you're betting on something that has to be right, and you're not taking all of these smaller things that you're doing, then every time you're wrong, you've wasted a shit ton of time. Whereas the way you're doing it, you're constantly playing for these smaller gains that actually pile up into massive gains.
I mean, again, whatever about the algos are just doing things that I can't do. Okay. And also, we're currently developing, so this is, I wrote all of our silly algos, so now we're doing Rust with, fancy front ends and all this stuff.
Wow.
Inbuilt indicators. So there's some guys who are taking our dumbass algos and putting a pretty picture in them instead of my silly little Python window here, which is just going tick, tick, tick. We're doing that primarily because it's a bear market. We're doing it because we wanted one view for all exchanges. Exchanges do things differently. But in essence, all of these kind of fancy front ends and so on are all just doing the same thing. What matters for the kind of algos I do is speed. So when I see, these two graphs here are percentage of slipped order volume. So we classify that as stupid money and we'll counter trade it. And if we're wrong, we're okay with that. So again, simple signals. In many ways, to be honest, I think with this method that we kind of more and more kind of lost interest in how good the signal is. I know that sounds ridiculous, but because most traders or algo developers are looking for that alpha, when this and this and this, then this, and our stuff is just so stupid and simple that it doesn't really care that much. Okay, it's kind of,
but it actually works.
I could probably build an algo on the annotation of the fucking Alaskan wolf, and it would work and produce just exactly the same thing. So just as an example here, so we got our fill. It was very nice of you, Brad, to get me into 200 grand trade. I'm losing my fucking ass on. Okay.
This is not financial advice, Shaun.
No, none of this. Obviously, none of this is financial advice. But just to give, I'm going to do this way too early in this trade. But again, just to demonstrate, so I'm going to start up my little dyslexic idiot. So what I will do here when I'm out of position, I'll hit this with a 4-time position size. So I'm going from 200 to a target of 800. Okay. What this will do will drag this up. Okay. And then I'll take out my 600K at break even. That means I've managed my average entry. And I'm still only at, even if I get that bit wrong, I'm at 0.25 leverage. So I can do this again. When I get to 1 leverage, I'll leave it, which means I'm either sitting in dollars because it's an inverse swap contract, or I'm not. So again, there's nothing about the way I trade that can ever result in a loss. That's incredible. Fundamental. And when you're as bad a trader at me as I was back in my days of button clicking, this is how you kind of come to this position. And how lucrative is it? again, I'm sure some people will look at, going 80%, 20, 15, 20% a month and go, that's horrendous. And I go, yeah, not so much.
Please.
So if you look at what
I'd love to meet the person that thinks 15 to 20% a month is horrendous.
Oh, trust me, man, they're
astronomical.
That's
incredible.
So if you look at what happened here, again, this is automated, but could be manual. So I added in 600 grand to move my average entry up. Again, this is just a demonstration. I wouldn't have. And then I immediately put an order on the books for the 600 grand to take it out, so that I will end up with, if that fills, with my original 200K short, but from a higher price. And so my whole, live trading method, just based on, all the other risk parameters, is actually all to do with managing the average entry. Okay, moving that average entry constantly around, so that when I'm wrong, I'm just going, I'm wrong short here, clearly. Well, you were, Brad, to be fair, you were wrong short, mate. And so the price is going up. So why don't I just bring my average entry with the price at no cost to me, just by, again, management size and so on. So that's it. I mean, there's no secret sauce to what I do. There's no, it is incredibly dumbass. And it's just based on survival. Simple as. Yeah.
But when you do these trades during the day, if you're doing 100 of them a day, are you flipping a coin for up and down, or are you making a decision based on what you're seeing?
I do use TA. So I will use, I'll generate, I look at momentum indicators. So again, the reason I was saying that it is a coin flip is more to focus people's on its minds that it's less certain than they believe it is. Yeah. Does that make sense?
Yeah.
So in other words,
absolutely.
I'm a huge fan of TA. You can look at my charts here. I've fucking lines everywhere. I've kind of got, I'm using your guys' package to see what are the order flow doing and so on, so on. So, but the reason I put it in those terms is to say that, look, a trader faces two problems in their life. Yeah. And it's a bizarre thing. They face a problem with what to do when a trade is in profit, and they face a problem of what to do when a trade is in loss. Simple as. Yeah. And they're actually almost exactly the same problem. Like, when do I take profit? When do I not take profit? What do I do? Do I close this? Do I take a loss? Do I manage it the way I do? And so on and so on. So the game and the analysis can get quite complicated, but fundamentally my focus is, I just found a contract and a method where I just can't lose money.
Do you set a rule on take profit on these that you're doing manually?
I wish it was sophisticated at that. I'm kind of instinctive in that way. I'm looking again, the advantage of trading one chart only, which is this. I trade one asset, one contract, one exchange by and large. So you do develop this kind of instinctive feel for it. It's not necessary, but I will just start to peel profit. And again, I will just move, my average entry around and just constantly take profit, because again, if you can get 0.01% 20 times a day, 30 times a day, 40 times a day, that's a lot of fucking money. And it's a lot more money if you're that active of a trader than you would make waiting for a big move.
Yeah, absolutely. Shizzy says, so Shaun's not a trader. He's basically just a risk manager.
Yeah, I think.
Would you agree with that?
Yes, 100%. I do. I'm kind of a bit pissed off with Shizzy. I'm joking, mate. Let me just say, I was such a bad trader that I needed to manage risk. Okay.
Yeah. You forced yourself into that role.
Yeah, it was that, or take all of those Bitcoins I've mined out over the years and basically just burn them. I mean, I think any trader who isn't managing risk is a fucking idiot.
Right. Again, Justin said, can't argue with his results though.
Yeah, a lot of people will look at this, and again, I would say it's dumbass, but the point is that they're, again, the way I look at it, is it hard work? Yeah, okay, the algos do their shit, yeah. But like, I can sit down here and I can make and I can increase my stack every day. And I can increase it doing these micro scalps more than the market moves, and I'm not taking a risk.
That's beautiful.
And so, it's hard work. Okay, I'm not doing much now because I'm trying to detox over Christmas, and the market volume is horrendous, and so on. But what I would say to people is, I'm not suggesting in any way that people trade the same way as me. I would strongly suggest, however, that they question the way they trade, and they question the basis for how they trade, and they think people who seek out edges and people who think about the market and trade the market in different ways tend to be the people that win. Because if you're trading it the same way as everybody else, remember, no matter what somebody says in some Telegram or Discord group, 70 to 99% of people are losing money. They may get the occasional big win when they guess, a big move, right? But the horrible statistics of the market is that just about everybody and everybody you're speaking to is losing money.
Absolutely. No, and look, I think what it kind of gives people hearing you talk about it is a perspective on this that can shift their mindset, right? To going from being the people that are constantly trying to predict the moves and thinking about being the kind of person that can see where the edge is, but also where the risk is, and manage it and do things more frequently than worrying about the big moves up. Because at the end of the day, you care about price based on the stack you have, but as a day-to-day person growing your wealth, whether it be in or Bitcoin, it's not as important to you because number one, you think Bitcoin long run will be back where at big numbers, but number two, because you're making money all day long in these little tiny increments.
And by the way, recently, because we began to do some property stuff, I mean, I'm taking out on my scalping accounts. I'm going, look, I'm keeping X Bitcoin in it, but I'm constantly, anything above that, I'm just constantly taking out in dollars, because we're doing some real world property stuff. So I kind of use these kind of little scalping accounts just to generate dollars. So if dollars are your objective, you can generate dollars using these kind of things. You don't have to take the rewards in Bitcoin. Right now I'm doing that only because we've got trees to pay for and kind of silly things like that. Normally I would just be stacking sats, but I need to spend some dollars. I'll do exactly the same thing, and I'll just cream off anything over a certain amount into dollars. Cool, no problem with that.
Yeah, absolutely. I know that you have taken under your wing some folks and done some training, but if you were, and I assume most of these folks are people that have experience with actually hands-on trading in the past. If you were taking somebody like that who's been, trading the way, looking for the big moves this whole time, and sat them down and they had $10,000 in their account, what would you have them learn first, and then what kind of approach would you have them take at a simple level to get started, realizing kind of the rules that you're promoting here?
So I do, I develop, and again, this sounds arrogant. So first of all, anybody I've worked with, I don't charge. I charge them exactly what my advice is worth, which is zero. Okay. Just in case, I'm not into, me, man. I fucking hate shilling. I hate all that shit. So I'm not sure. Neither am I capable or that. But what I find with most people that I worked with over the years is that their fundamental problem is psychological. That's going to make it sound like I only work with nutters. I don't, but they're getting themselves into highly stressed. They have unrealistic expectations about how much money they can make. We're in a place that where whichever group you're in, somebody yesterday made 10,000% on some dog coin and all of this. And look, forget all of that. What you should do is simply but this is the way I'm doing it. Maybe I'm 99.9% sure there are better ways, but just think about it differently. If you can't walk away from a trade, leave a trade open for the 2 to 4 weeks of your vacation, you shouldn't be in the fucking trade. You should be able to walk away and whatever. Yeah, leave it there. And so on. So I think, like most people who are active traders, have done that sleepless night. I've done it myself, waking up in a cold sweat,
I have.
reaching for my phone and going or staring at the candles and feeling great 1 minute when the candle is going my way and then awful the next minute. This is not an environment that is conducive to making great decisions. So
in this world, we're doing that 24/7.
Yep. My first advice to anybody is watch The Big Lebowski and just be the dude, just chill.
I love that.
And take the free money and develop your own style. But again, fundamentally, every trade you enter, assume that it's wrong, because then you'll be forced to think about what you do when it's wrong. And again, I don't use stops. Maybe there's a price for stops. Don't agree with them myself, but hey, whatever. Okay, I have my way of handling risk. Be okay that it's wrong. Okay, don't go off blaming the big evil market makers. I'm a big evil market maker. Trust me, I'm not chasing your fucking stops. I have no interest in your stops. Just none. Okay,
right.
And neither does any other market maker. Your stops are of no interest to us whatsoever. And that's it. This market can offer unbelievable returns. Yeah, if you're realistic about it. Okay, it can offer an excellent stress-free way of making money if you're just a dude, and just find your way and do not. And again, I get kind of the common things, and I can say this only because I've done. Like, there isn't a stupid thing in this game that I haven't done. So this is not criticism. Okay, is that big move syndrome is one of the biggest mistakes I see. And like other psychological mistakes people make is that when they're in an underwater trade and price comes back to them, they tend to do what I call the relief close. They're just so fucking stressed about it and happy to get out at break even that they don't even consider whether they should hold it. Yeah. So
it's going to go past this.
Yeah, it's a psychological game that if you take out the worst things that can happen to you, there's still more than enough meat on the table, and you can trade the game in a way that can be highly lucrative relative to any other asset class and completely stress-free. If you're stressed about a trade, don't fucking take it. Yeah? Like, why would you?
No. Yeah, that's fantastic. Shaun, this is great. Niblet says, so the super small multiples require a huge volume of those multiples. Is such a volume feasible for people with a day job, or does it need to become a lifestyle itself? I think you kind of answered that. They need to be able to walk away.
Yeah, I mean, again, if let's say you're a great trader, okay? I'm a chizzy, so I kind of know he is, yeah? And I go, do you really expect to make the same returns working 4 hours a day as you do 16? Well, come on. Should that change your method of trading? I would say no. I would say that a lot of people are weekend traders. So a lot of people are always looking for, like, weekends. You're just going to get chopped to shit. Yeah, you need to. Weekends are basically, the market's only really moving anymore during TradFi hours. And so if your ambition is to make money during the weekends, remember that basically everybody's percentage profit is declining during the weekend. So you can play this game as you want, but there's no way if you're doing it part-time, you're going to make as much money as you do it full-time. And there's no way you should go to doing it full-time unless you've got sufficient capital behind you. And I don't mean in your trading account, I mean in your life. And that you have proven to yourself you can beat the market in different cycles. So in other words, if you
that makes sense.
Money in a bear market that can go on for 2 years, or a bull market that you're kind of not being fair to yourself or your family. by doing that. So again, experience. One of the things that people say to me, because I've been lucky enough to develop a reasonable stack over the years, well, that's okay for you because you've got X. I'm going, look, these rules, I don't give a shit if you're trading $1,000 or 100 million. It doesn't make any difference.
Yeah.
It doesn't make any difference.
Absolutely.
There's this kind of thing that exists in traders' minds that they're okay gambling, until the $1,000 is 100,000. I'm going, well, yeah. What happens there is your $1,000 turns into $0 fucking dollars. Yeah. So none of this, none of this. No, it may get to 5,000 along the way, but none of this has anything to do with the size of your stack. And I would also say, when I start kind of spouting at people, I tend to say to them, look, if you're trading more than $100 so you can play the game, that's kind of a bit dumb. Everybody wants to be,
absolutely.
Respect. But I would always say, respect the game. This is again, you're straight into the top league against the professionals. Find a way, be relaxed about it, and fundamentally, you can't walk away and leave a trade open for fucking weeks and weeks. Don't be in the trade.
Makes total sense, man. Shizzy said, I've made every mistake that you guys named and realized I am a buy and hold type of trader. Now I'm thinking I may try this risk managing.
Yeah, I mean, there's nothing against being an investor. This is not like trading is not investing. Yeah. So like, when the market bottoms, or if you think the market's in and you're going, look, I'm going to buy some spot and hold it for, for however long I think it is. I mean, I think most traders would be better doing that, strange enough, because again, the vast majority of traders lose. And then you're really just focused on two things, which is what's the macro top and bottom of the market, and get close enough to those, and you can make a lovely return, again, relatively stress-free. Trading is not investing. Trading is comparing chess and checkers. Yeah, I'm not sure which is which, but they're not the same game. They don't have the same rules.
Yeah, absolutely. Justin said, I do tons of scalping on my phone using order flow and what's in Fire Charts. And for those that are DeFi listeners, Fire Charts is a product from our company, Material Indicators.
It's here in the middle of the screen.
There it is. There it is. And Justin is a longtime Material Indicators customer and community member. So thank you, Justin.
And a great trader, by the way. Even though, like all good traders, he's very modest about it.
Yes, absolutely. Yeah, I think the ones who are most boastful are probably the weakest amongst the crops.
Would be my opinion, developed over the years. I mean, look, there is nothing better than, as a trader, if you're doing the 10 to 25x long short thing and you hit a home run, you want to shout out about it. People do that. That's cool. Yeah. I don't do that. I'm not that interested in again, everybody, I always spoof on about leverage. This is a leverage contract, but 99.999% of the time, my leverage is under 1. In fact, it's always under 1. So there you go. Even though you got me into this awful trader, Brad, Jesus, man.
How are we doing? I can't see it.
I'd say we're down about 4 million at this stage. No, we're fine. I mean,
holy shit.
No, I'm joking. We're not. What are we down here? We're down 0.1 something of a Bitcoin. But again, I don't care. You know what my liquidation price is here? 100 million. In other words, I'm not getting liquidated. I'm going to let this run. I'm getting paid a bit of funding. I'll let this run and I'll DC out. And my point about, handing the choice to you is not in any way to take the piss out of you. I would do that anyway.
Sure.
Was to simply say that I really don't care. I really don't care about the direction of this trade. This trade, I will worst case break even, but I'm pretty confident I'll make some money out of it. I just need to, again, apply some very basic and simple rules.
That's beautiful. Well, listen, I think that's a perfect summary of everything you've talked about today, about how you do things, right? And that is that you have the risk management in place, the rules, the way you do things. so that you don't ever have to worry. You don't have to do the 24/7 looking at your phone or your computer to see where things are. You know what the rules are. You know the parameters of what you're engaged in. You found the edge. You found the place where people want to pay you to trade, and you leverage all of those things into break even or profit. I think that's fantastic. And you're not looking for the long giant score. You're looking to build over lots of smaller trades.
Yeah, again, I do the long trades as well, and again, so
sure, I get it.
I do those,
but you're not out picking some token. You're not picking some token that has zero fundamentals and saying, "Oh yeah, I want to do a 10x on this one." I mean, that's just not your play.
No, I mean, I will, when the market bottoms, pick up some donkey shit and some horse shit and hold it, yeah. And then I'll unload it along the way, dude. But again, that's more kind of a semi-investment thesis on it. But that's not trading in my terms.
Right.
What I'm doing here is kind of very active trading. And again, I don't want to discourage anybody. As I said, I think most people shouldn't trade the way they trade, and that's just statistics. Okay. I think it can be, if you find your own way. It doesn't have to. This is my way. It's worked very well for me. Another couple of people use it. It's worked very well for them. Doesn't mean that there aren't better ways. I'm just a dumbass, greasy engineer, man. I'm no quant. Okay. But this has printed me money consistently since 2018. Every day I wake up with more Bitcoin or dollars, depending on what I want. And I'm kind of okay with that. So,
I think everybody should be okay with that. That's brilliant, man. That's fantastic. I love it. I love the story, and I love the way you do things. So I really appreciate you coming on to give us an education today.
I'm going to just say, just for the MI people because somebody said, did you rage quit? I said, no, I just need a break. Yeah. I just need to need a break from Twitter and all of that. So it's Christmas. So I will be back with my annoying views in January. Yeah. If not sooner.
Nice. So, well, I love that you're up in the mountains.
Enjoy the peace and quiet while you can, guys.
Yeah, exactly. That's great. That's great. Well, and I'm assuming we can still get you on here for the show. So
100%. Yeah. Look, I just needed to disengage from all this social media nonsense. That was
the constant flow.
I think I'm on my 14th Twitter account since I joined this space. That's just shows you what I think.
Well, again, I mean,
number 15 will be coming soon.
I think that speaks to your personal philosophy too, right? It's the same way with your trading with that, is that you're not holding on to shit. You're not like, oh my God, my entire identity is tied in this trade, or my entire identity is tied into this social identity or account, right? It's like, I can take it or leave it, and I can move on from that. And I think that embodies how you
my
trade.
identity was tied into my Twitter posts. I just go over to that balcony and jump off.
That's great. That's great. Shizzy said, great job, Shaun. This was amazing.
Thanks, Shizzy, dude. Thank you very much. As I said, like, because all of this is very, very, I don't want people to expect there's nothing complicated about what I do. I would just say to people, you don't have to do it this way. Maybe you don't have access to these kind of contracts. Although I do note that a non-KYC AML exchange was launched by Bybit this morning. Not shilling it. Maybe they'll steal your money. Fucking DYOR. But find a way to trade.
Bybit launched a new exchange this morning?
A DEX or a partnership with a DEX. No, I presume it's like the XDY. They call it ApeX, which I think says everything you need to know. Yeah.
There you go. There you go. Justin says, Shaun, you're the best. Thank you.
Dude, Justin, love you, dude. You know that. And again, I'll see you guys over in MI once I've, because as a maximalist, everybody knows this is toxic. You let the toxicity build up too much. Okay. So you have to detox every so often.
That's awesome, buddy. Well, thank you so much for doing this today. I'm sure we'll have some other questions and thoughts that come out of this, but I really appreciate it. To everybody listening on the podcast, I am going to post the video, but I'm going to do some clips and zooming on this because I think it's so people can see the screens that he was showing us. So I'll try to do some edits that way this weekend to make it easier to see the wide monitor. But really, really appreciate it. Justin says, don't have a better word, but this is a decade of learning condensed into a brief lesson. I'm starting off standing on the shoulder of a giant. All love. Enjoy your detox. So
cheers, my man.
we
You
appreciate
have a
it.
great Christmas. Yep.
Yep, absolutely. Shizzy, Niblets, Justin, and Mr. Muccioli, thank you so much for joining us today. We appreciate you and we love you. Sean, thank you so much for doing it with us today. If you like what we're doing here, please like and review us on Apple Podcasts, Spotify, and YouTube. And you guys know all the other steps you need to take. Joe, we lost Joe today. I think he was dealing with a family thing. To everybody, I'm going to probably cancel tomorrow's watch my Twitter account, but getting off this ship and then getting back in time to actually do a proper show is probably going to be insane. So I'll let everybody know via a tweet. But at this point, expect that you'll see us back on Monday. So appreciate it, Sean.
Take it easy, guys. Cheers.
Have a great day, everybody.